All right, Blake. So one of the things that we see in the May Fed update was that consumers are saving more than they did at least from the month prior. So in April, the number was 4.1% of disposable income being saved. That number is now up to 4.6%. Let me ask you this. Is there a cause for concern with this number, or does this show that the overall economy, or at least the personal economy, is strong?
Well, I think that it's once again kind of a twofold answer. So for the people that are, saving their money, I think that it's a positive thing because we see consumer debt at an all-time high and American debt at an all-time high, especially on credit cards and things like that. So with people saving more money, it definitely opens up an opportunity to number one, get out of that debt, but number two, to be able to have some money that they can throw at maybe some of the problems that they might face. So I heard a stat not too long ago that right about 50% of Americans actually struggle to have enough money to pay for a financial emergency over $500. That so
Wow.
$500 might not seem like a lot to some of us, but to others of us, $500 is enough to literally break the bank. So if people are saving their money and being a little bit, more cautious with what they're spending on, I think that that actually provides a road to financial freedom for that average everyday person living in America trying to save their money and build a
Well,
life.
and I
Hmm.
absolutely agree with you there. I think that financial freedom is key to Americans really getting out of debt, staying strong, and being able to pass down a family legacy to those, and really be able to provide for their family. But this does come on the backside, or I should say, the flip side of
Yeah.
if there's more money settling in these consumers' accounts, there's less money for corporations to make profit, right?
Yeah, and that's where the other side of this issue comes into play. So, um, as Americans are saving more and more money, they're spending less and less money, which for corporations is kind of a bad look, right? Because they're always trying to make the best top dollar that they can. And so I would expect within the next quarter or so to find some companies missing their margins. So maybe not making as much revenue as they thought, maybe not as much profit. And when that happens, the downside is that, well, it's inevitable that there is some job loss, right? So
Hmm.
that is something that we could see in the future. I don't think that we're there yet. Um, so looking at some of those stats that you mentioned, uh, the savings rate in 2020 was 16.8%. Okay.
Wow.
But we still had a job market shortage. So now that this number is to what, what was it, 4.6%? And it's an
Yeah,
increase
4.6.
of half of a percent from last month. Does that signal something bigger? Potentially. But is it a game changer as far as the overall economy? Potentially. I mean, maybe in the future, but as of right now, I think it's just showing that the economy is slowing, but not necessarily, uh, stopping. It's not in total free fall.
Yeah, I mean, it might not even have an immediate impact right now. I mean, just like you said, from April to May, only 0.5% increase. That's not a whole
Yeah.
bunch when you really actually look at it. That probably for
No.
most Americans is somewhere between 20 to $30 more, maybe a half tank of gas. But it is interesting to see. I think that it does indicate that Americans are starting to feel a little bit worried about the economic state of the United States, not only going through the end of 2023, but going into 2024 and obviously the election year coming up. It'll be really interesting to see how that plays into the election and ultimately what happens there. Another thing that I think that could be a great takeaway on this is that at the end of the day, the dollar still doesn't stretch the way that it used to, right? So I actually did a little bit of research here, and the average personal savings rate, which has been tracked since 1959, sits around 8.8, nearly 9%. So, despite the increase from April to May, we're still looking at relatively low savings numbers, right?
Yeah, I agree. It's definitely still a historical low. And I believe that's because, like we talked about on a previous episode, there's more of a consumeristic type of feel with many Americans in the market today. So, Americans are paying top dollar for a brand new car, top dollar for a brand new house, top dollar on their credit cards to buy what they want instead of being patient and saving and being able to purchase it outright, which creates, again, more consumer debt and more interest for them to pay off later. So, I think that's why some of these gurus, like we talk about, like Dave Ramsey and other people that are all about savings, saving your money, driving an old car, that sort of thing, that's why they have a point because a lot of people don't have the financial discipline to be able to control their spending habits.
Yeah, no, I that's definitely a very solid point. I hope that a lot of people do see this as a sign like, hey, maybe I should start saving up for the future. Obviously, we believe that as a cornerstone on this program, it's important for people to be able to rely on themselves financially and not have to jump into a million other things and
I
loans and the whole
agree.
nine yards there. One
Save
of the things I
now
just
so you
want
can spend later, right?
well, that's absolutely right. And actually, I have a graph up just showing that decay in savings over the years. So it is remarkable. We do have to find a way to make every dollar count. And so I think that you're exactly right. Let's look at saving. And I wonder if the June and July numbers will show more of a trend in this financial uncertainty. Blake, thank you so much for breaking this down. I really appreciate it.
Thank you.